Looking at where the consumer end of this is, Yuri Humber, founder and president, Japan NRG platform, the Yuri Group in Tokyo. Yuri, looking at Japan and all of these trade sort of stresses that are going on, seems to be reflected, or the Japanese bond market, like the U.S. Treasury market, showing signs of stress with all of this turbulence and unpredictability around the trade wars, etc. Your thoughts on Japan, or the demand side of the world, the demand side of the energy equation, whether it be oil or gas, holding up, the macro picture holding up in Asia under all these stresses?
Thanks very much, Sean. Yep. Good morning, good afternoon to everyone. I think that there's let's put the bond prices to one side for a moment because I think it's a little bit that's more of a macro issue. But the fundamentals of the Japanese economy is that it's been on a growth trajectory for the last 4 years. This isn't spectacular growth, the kind that you'll see sort of in places like China, but it's still growth. The government just very recently revised upwards the first quarter numbers. It's flat quarter on quarter, so it's again nothing to maybe shout home about, but it is better than was expected. And overall, I think you'll see that there is a wage growth, again somewhat below inflation, but there are a lot of very positive macro sort of factors inside the economy. What I think in terms of the import side, however, you have a slightly different story. On the one hand, you've had basically the lowest imports of crude oil in April in at least a decade. You've had some fairly weak imports of thermal coal as well, but there has been an uptick in LNG imports. And the main thing, I think, from a Japan perspective is that with the yen somewhat strengthening against the weaker levels, it gives Japanese companies and importers a lot more purchasing power. So even though as I said, the actual volumes are somewhat down, the cost of those volumes is about 10% lower than it was a year ago. So I think that while I wouldn't say necessarily this is sort of time for Japan to start ramping up the imports of, say, crude oil, but it's certainly on the LNG front, it gives it a little bit more room to maneuver. And though this is probably a little bit coincidental, you've seen some long-term contracts being signed by the Japanese LNG importers recently. So JERA, Kyushu Electric, with the US. And I think that probably as we continue the never-ending negotiation around Alaska LNG and so on, with a slightly stronger yen and a slightly stronger macro outlook, Japanese importers have a bit more room to negotiate.
Yuri, speaking again from a Asia point of view, and where the stresses might be in all of this, you're signaling that, I mean, looking at it from a wider Asian lens, Japan, of course, second biggest economy in Asia, the idea of the demand centers of oil and gas, the biggest oil and gas importers in the world, in China, Japan, Korea, etc. Does this hold? Does the macro picture across Asia hold? This lower energy price is ultimately a positive, and gives these economies a break. How do you see that going into the second half of the year, this critical demand region for oil and gas in the world, and underpins ultimately the price point?
Well, from a Japan perspective, obviously reliant on oil and gas and coal imports for the majority of its primary energy. So Japan is very sensitive to the price, and therefore a lower global price works out as a positive for the economy. But China, for example, is a lot less sensitive to that. I think we've all seen how much it cut back LNG imports since the tariffs came in. It also has a lot more options in terms of where it secures its gas, not with, including its own domestic reserves. And I think we've seen some of the fastest growth in domestic gas production in China for a while, and also record coal production too. So I think that on the whole, there is what one of the biggest, I suppose, risks is beyond what David added with the obviously with the move away from the US debt, that would be a massive downside. But I think
Well, that is
the
happening. I mean, that's what the bond markets are telling us in terms of we have a big auction this week in the US. It's not a big in the size of scale like the trillions that was mentioned earlier by Omar, but there is a $10 billion 30-year bond treasury auction this week, which is the weakest end of the curve. And that will certainly send signs as to the scale of the retreat from at least the long end of the curve in the US Treasuries.
and then look, that's a huge factor for Japan, which is the biggest holder of US treasuries, I believe, at this
Yeah,
moment.
over a
So
trillion dollars in Japan.
exactly. So, I think that the while on the certain front, China has some protection against what happens in the US. Japan is a lot more tied in with the US economy in terms of investment, in terms of bonds, in terms of global energy prices. As I said earlier, right now, Japan's macro picture isn't so bad, despite, some of
Well,
the
it's had a contraction in the first quarter. We
no,
could
it's
be
zero.
facing.
It's that they've revised it upwards, so there is no contract. It's a quote unquote zero
Okay.
move. So as I said, it's not that this is a fantastically, fast growing economy, but it is on a somewhat growth potential trajectory. But if and lower energy prices obviously help. But if the overall US demand picture worsens, if the bond market in the US worsens, then obviously these factors have a massive impact on Japan. And I suppose that on top of everything, if we're talking about such drastic measures as um, as 500% tariffs on anyone that deals with Russia. I mean, how many economies in the world don't deal with Russia? How many economies,
Including
Japan,
Europe, which
right? So
is
it's basically everybody, but it's such a huge play in energy and metals
but the
markets.
likelihood of that happening seems still quite remote in the immediate term. But never rule out where this negotiation with Russia and the US is going. But it's still on the remoter end of things. But what is very real and imminent, of course, is the outlook for unilaterally imposed tariffs on Japan and on the rest of Asia. China is dealing with the US today, and they seem to be stumbling their way towards some sort of agreed outcome, whereas the rest of the world, Japan included, seems to be in a kind of a suspended space where Trump could wake up at the end of June when the 90 days expires and say, okay, your tariff is going to be X, 20% or whatever it is. Can Japan handle that sort of unilaterally imposed number without it being negotiated?
Not very well, but you see, Japan's biggest problem right now is that, we talk about the US as if it's one position, but for example, as reported in Japanese media, a Japanese side is in talks with the US, and there are three people on the US side leading those talks, and these three people have different opinions and different focus points, and at one point reportedly started arguing between themselves in front of the Japanese side. That makes it very difficult to really conclude negotiations. And I think while Japan has shown a strong willingness to try and meet halfway to find a compromise, there are certain red lines, and absolutely, doubling tariffs and slapping further tariffs on auto, steel, etc., isn't going to make it very easy for the Japanese government.